of guaranteed and tax advantage products in the country and serves a nationwide network of financial professionals. Call 1-800-290-7226 or email thequest@brokersalliance.com. And remember, when you need financial guidance, call Brokers Alliance.
Well, welcome back to the Quest for Financial Freedom. I'm your host, Steve Savant. And of course, with me today is my very special guest on the Quest, national insurance expert, Eric Palmer. You can email either of us at thequest@brokersalliance.com or call us 1-800-290-7226. That's 1-800-290-7226. In the second segment of today's show, we're going to review a few things we talked about in the prior week and finish up on Medicare. Oh my gosh, I might as well just do it right now. Medicare. Well, we can't get to Medicare until we're 65. And Medicare is a health insurance program operated by the federal government. Everybody knows that. But a limited amount of nursing home care is available under Part A. And, you know, I wonder sometimes if we can even qualify. You know, you're trying, a lot of people looking at long-term care to try to supplement. And I'm not even addressing Medicare Part B yet. I'm just bringing up the Medicare, the normal Medicare A, your qualification for it as it relates back to long-term care.
Right, right. And it's interesting to note that we talk about the demographic that can afford a standalone long-term care policy and the demographic that, or what they hope you are anyway, demographically, to qualify for things like Medicare or Medicaid. So a lot of times we find that the folks that are purchasing these long-term care standalone policies are disqualifying themselves potentially from Medicaid. And so that's stuff that we have to take a look at, and every single time we are analyzing long-term care for our clients. Is Medicare and Medicaid something that we're going to need in the future? And if so, we better make sure that these policies are wrapped around that, so we're not putting money somewhere that can't be used or has to be liquidated to qualify for Medicaid.
In fact, actually, I think the government takes a somewhat dim view of you dispossessing yourself of your assets. Of your assets,
right.
Yeah.
Right.
I mean, you know, they're kind of, and that's a Medicaid, of course, is the welfare program funded by both federal and state governments, and per state, the qualifications of this for long-term care are totally all over the board.
Right. This is a sticky subject. It's something that you definitely want to put the professional on the phone with you. If you're an advisor out there, you're working with your clients, don't just jump feet first into that topic. Make sure that you got all the bases covered, and the products that we're talking about, again, are addressing those two specific issues.
Now, again, what I'm going to be quoting here are national averages. They're certainly not specific to our state here or your state, but they're national averages. We talked earlier, before the break, I was talking about assisted living facilities. In 2009, it was 3131. The 2010 hasn't been really digested yet. I haven't got the summary. Nursing home for a private room, this is by yourself, is about $219 a day, which can figure out almost 80 grand.
Right.
I mean, that's serious money.
That's big money. One of our number one insurance carriers actually came out with a couple of 2010 statistics, and they said that the assisted living is about $3,300 a month now. Our at-home care, you're looking at about $21 an hour. So it's up there. It's definitely up there.
Well, when I'm comparing, I mean, I think about this. If I'm going to spend, if I'm reading this correctly, I'm reading for a private nursing home room, it's $219 a day. For a semi-private where I have a bunkie,
right,
so to speak, it's $198. So I guess I'm asking myself the question: for $21 difference, I want my own room.
Right.
You know, I think I do. I mean that'd be shaving it, because you're not talking about that much of a savings.
But there's a reason why that option exists, and at the end of the day, it comes down to how much does our client have to work with. And if we're doing some very specific planning and we're walking a tight rope, maybe they don't have a lot of assets to work with, there's a low monthly income, we might have no choice but to take one of those sharing options. But it's good to know that it's there, and that we have the choice, and that we can still cater that plan to the specific needs of the client.
Now, you were talking about the health, the home health aid, about $21 an hour, somewhere like that, and a homemaker companion is about $19 an hour, and that's at today's number.
When looking at long-term care or cross-linked benefit products, we have to ask a lot of questions. You know, what facilities are approved or not approved? What type of individuals do they have to be licensed caregivers? Is there any flexibility for non-licensed caregivers such as family members? So those are important things to identify, and then inside those policies, you're exactly right. It could vary by cost, it could vary by benefit, and we got to take a look every time for each client.
I've noticed that when we head into the nursing home, well, all of a sudden we get into issues like, should I prep a document that directs medical treatment? Should it be withheld? Should I continue it under certain circumstances? A living will, a durable power of attorney for health care specifically.
Right.
And again, remember, if this is something that's triggering some things in your head and you say, hey, I need to kind of look at this, talk to your attorney, make sure they understand the health care law. There are practices. In fact, actually, there are practices in Arizona that are excellent that do what we call elder law. And it's excellent because they know these codes, they know how to write specific to your recommendation. What do you want to do in case you can't make the call?
And we actually, at Brokers Alliance, we do have internally an estate planning division with access to some of those professionals that are experts in specific estate planning fields, the documents involved in estate planning, and make sure the language is sound to protect us in some of these instances that we're talking about today.
You know, I'm looking at, when I'm thinking about creating a will, a durable power of attorney, and really trying to use my cognitive skills today to direct what kind of medical treatment I want in the event that I cannot choose for myself. And how can I prep that? And that's why you really need to sit down with your family to really go through these things. I mean, it's not only do you start your family for the long-term care policies and to see what's good for mom and dad, but you also want to look at the ability. What happens if you go into a coma, to have a coma, and there's no hope of recovery, or with a small likelihood of recovery and maybe permanent brain damage, or afflicted with a brain damage or disease, severe in nature, or a terminal illness? I'm trying to cover some of these possibilities up front in a living document that makes directions. It is my will being executed here. I'm just doing it in advance.
Right, right.
These are really huge issues. When a patient is incapable of expressing his or her wishes, there must be some other way, some kind of guidance for the decisions to go forward. And that's why we always say, you know, make sure all the kids understand what's going on, your children, make everybody participate in this. End-of-life decisions are critical. And the more we try to be preemptive about it, we're not only talking about preemptive about it by buying long-term care,
right,
but we're trying to do what I think is a reasonable issue of stewardship. You know, you just want to be able to say, I've really went down the road, I've taken care of last funeral expenses, I've taken care of legal documents, I have a long-term care policy, or as we've said all this week, it just doesn't have to be a standalone contract like we're talking today,
right,
but it could be a long-term care linked policy with an annuity, a long-term care policy linked to a life insurance policy. Disability, if you're still in your earning years, I mean, we had Marcy on earlier in the week.
Right.
That is the forgotten policy. I don't know why people don't buy this anymore. Why wouldn't you protect your paycheck?
And there's even features inside these policies that offer riders for disability. So you don't even have to buy that standalone. You can actually add that to some of these policies as well. I think that the most important thing to remember as an advisor especially, or as a consumer out there, is it sounds like there's a lot of choices. It can be even overwhelming, as we've discussed all week long. There's a lot of different ways you can go about this, but our advisors, you know, there's a plethora of material out there, very simple and easy to understand. It explains it well. These statistics that we talk about, they're available, they're published. It really helps you help your client make the right decision and choose the correct policy or combination of policies to use.
I'm looking at several contracts. I'm just looking at this grid. Several contracts, standalone contracts. And I mean, these are big name players. I mean, Genworth, John Hancock, the Wild Kingdom Mutual of Omaha,
right,
the Prudential, the Rock, Transamerica, the Pyramid out on the West Coast. These are all big-time players, and you'll want to choose a company that has really good definitions in their contract. And again, we can help you compare that if you want. And also their ratings, because we track all 6 of the major rating services. We look at the balance sheet items to see how these carriers are doing, because we want them to, you know, the contract is only as good as the carrier behind it.
Right. And experience is key. You know, you want to look at these companies. The ones that you mentioned are on our core carrier list, our top player list, because they have the most experience in claims paying. So the fact that they've actually paid out millions and millions of dollars in claims over the years makes them, or makes a better point that they understand this industry, they understand long-term care, they build their products so that they can have that money on the side ready to pay the claim when you actually need it most. So you don't want to just arbitrarily choose a company, you want to make sure it's a company that understands the long-term care market.
They give you so many options. I'm just looking at this comparison, and they have some that'll do 10 pay, or you can pay to age 65. Some have 20 pay. Some are one single deposit. I mean, there's a lot of ways to make this happen. And I guess when you're saying 10 payments, then it's you have it paid. You're not paying the 11th year, the 12th year. You're paying a limited pay so that you can get it up and out of it. Because you don't want to be paying premiums if you can help it. You don't want to be paying premiums, you know, when you're living on Social Security or retirement. You want to have this already done and paid for.
Right. And like we said before, there's a lot of different options out there. It depends on where's the money coming from. Are we paying this on a monthly basis out of your paycheck? Is this coming from an annuity that you have sitting on the side, a bank CD? There's a variety of different means to pay for these long-term care policies. We ask the questions, where's the money coming from? And that helps us make a decision on what payment option is the best.
We're living longer. There's no question about it. We're facing the facts today. We've talked about it. They're tough. 70% of people over 65 will require some long-term care services during their lifetime. 80% of people that experience long-term care are now doing it at home. That's a big shift, a big demographic shift. But only 8 million people out of the 310 million Americans are covered with some form of long-term care. So we're trying to educate. We're trying to alert everyone to all what's going on, giving you the statistics, kind of giving you the idea this whole week long, right, Eric? We're just trying to give you the options.
And it's that statistic that originated the development of the Pension Protection Act. It's that so few people are setting money aside for long-term care, but it's such a growing epidemic. Long-term care, we've seen the statistics. It's going to happen in your elder years. Make sure you're prepared for it. That's what we're trying to say.
It sounds like the United States government isn't going to be there to really put the money down for it. I mean, really, we're seeing a transfer of responsibility back to the American saver, the American investor, the citizen of the United States. I mean, when you think about all that's happening in the politics, because politics is all about the economics, and the economics now is squarely on the shoulder of the citizen. So again, I want to thank you all this week, Eric. You've been really helpful.
Absolutely.
We've really laid it out. I want to thank you so much for being our special guest on the Quest. I want to thank our special Brokers Alliance in America, where anyone can go on a quest for financial freedom. So until next time, remember what the good Reverend John Wesley once said: make all you can, save all you can, give all you can. I'm Steve Savant. Join me next time on my quest for financial freedom.
Quest for Financial Freedom is brought to you by Brokers Alliance, the premier provider of guaranteed and tax advantage products to a nationwide network of financial professionals. Need financial guidance? Call Brokers Alliance. You can request an email link of this webcast at our email address, thequest@brokersalliance.com, or call us 1-800-290-7226. That's 800-290-7226. And join Steve Savant next time on the Quest for Financial Freedom in your lifetime.